Good morning, traders. It is the 28th of March, 2016, Monday, day after Easter. It's 8:01 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall sentiment overnight, based on the various macro or various commodities that I watch, overall, oil is very strong, is actually slightly strong, up 1%, 40 cents, trading at 39.86 on the May 2016 contract. The U.S. markets are up slightly, about zero point 0.3, zero point 0.2 to zero point 0.3%. The treasuries are down slightly. The U.S. dollar is down slightly. The bonds are down slightly, and gold is down at $1,218.60, down $3.10, and the Japanese yen is down. I want to remind you that there are markets that are closed today in observance of the Monday after Easter. These markets are Australia, France, Germany, Hong Kong, Italy, Spain, and the UK. And there are some others that are closed today. So if you look at your overnight volume or the current volume across the board, you'll see that it's very light because the Eurex and other major global exchanges are closed. China's Beige Book came out overnight, and it shows that only 1/4 of the 2,200 companies, 160 bankers surveyed, are expanding their workforce. Approximately 77% are on hold or are letting people go. That's the key news overnight. In addition to that, we got some numbers at 7:30 Central about a half hour ago. You can always look those up. For the week, since it is Monday, we're looking at a fairly busy week. This morning, we already got the numbers that we expect, but we're still looking for the market services PMI at 8:45 Central, 15 minutes into the open. U.S. pending home sales at 9 Central. And then we have some Japanese numbers later in the afternoon at about 6:30 to 7 o'clock Central. Tuesday, the key number for Tuesday is the 9 o'clock Central U.S. consumer confidence. We're also getting a Case Shiller at 8 Central, about the time when the Trader Bite starts, basically this time tomorrow. The Japanese industrial production, vehicle production coming in the evening session on Wednesday. Again, this is a review of the week. Mortgage applications at 6 a.m. Central. German Consumer Price Index at 7 Central, and then we have ADP employment 7:15, crude oil at 9:30. Thursday is a fairly busy day. We have numbers out of Germany for unemployment at about almost 3 a.m., 2:55 a.m. Central. The British consumer credit, gross domestic product, Eurozone Consumer Price Index, and then we get initial claims in the U.S., continuing claims, and then manufacturing PMI at 8 Central that evening, Thursday evening. The big day this week is, of course, Friday. It is Unemployment Friday, the first Friday of the month. The numbers before that are the market PMI manufacturing out of the UK at 3:30 a.m. And then the unemployment rate in the Eurozone at 4 a.m. Then we get the U.S. numbers at 7:30 Central. The unemployment rate expected at 4.9. And then we get the non-farm payrolls, the private payrolls, and so on. At 9 o'clock Central, we get ISM manufacturing prices paid and construction spending. And then also University of Michigan final also at 9 o'clock Central on Friday. So Friday's pretty busy session. Let's take a look at what happened here on last Thursday. Friday was a holiday. Last Thursday we gapped down. The expectation, the key expectation, is an attempt higher towards the prior day's range. and then expected failure for it to start turning over and pushing lower. What it did instead, though, is it we had some responsive buying back into the range. We had a quick tag of the midpoint of the gap close 2014.75 to to the 2029. This distance here. The mid was about right here, and that's where we stopped early on. And it looked like it was done to the upside and started rotating down and pushing into the opening swing. The expectation is an attempt higher and a continuation lower, and that didn't happen. Instead, it started to compress, and then it ran into the close into the holiday, and it ultimately went and tagged the closing price. The orange line here was the prior day's closing price Wednesday, where it rested. This was an incomplete auction. The market did not shift the point of control up, so it wasn't as easily definable. But there was a trend. The market never turned over, and the market did not rotate into the close. So what this looks like is an incomplete auction to the upside. So as with all incomplete auctions, the expectation is that the overnight session would likely carry it higher, and it did. The overnight session carried it higher to where? To the point of control, the 3-day point of control balance or 4-day point of control balance that we left behind last week. If you recall, we had these 3 days where the market balanced out. Here, we drew a micro composite around them to find that the point of control is at 40.50. And then I added this additional day, because its point of control was well within the micro composite, and that's why you get this big profile right here. The point of control of which is 40.50. The overnight high is 39.75. Missed it by 3 ticks. The market has rotated since, though. Very tight, a fairly tight overnight range. It did gap up, has rotated since, and is trading below the overnight point of control, threatening that overnight low, giving us a higher expectation of responsive selling on the open. So here's what things look like. The blue profiles, the blue on gray, are overnight sessions. The black on gray are day sessions. And what the market has done is it's opened higher, has drifted up, and then had a big push to the high of 39.75, and has not had a pullback for a continuation, has instead rejected that push. This was a news-driven type of push, and the market is drifting below the point of control being right here. The market's drifting below the point of control and is getting close to the overnight low. This sets us up this morning for a more likely responsive action down into this 2021 area. Remember, we still have that 2026 below us. That's been tested from above and below, so it's not quite as valid as it was last week as a key area, but it's likely to drift through and walk down to 2022 for a test today. I'm looking for it to stabilize, try to attempt to push higher, and then get back into this high volume node this morning. There's a caveat. So again, let me draw that. The primary hypothesis is a choppy open auction out of range, or open auction slightly in range. The expectation is a drop down eventually into the 2022 area, expecting it to chop around a little bit, attempt to go higher, and then continue down to 2017 to close this fairly bulky point of control down here. That's the primary hypothesis. The secondary hypothesis is that we chop around, we come down, poke in here, unable to push through that 20, 25, 26 area. and we start to rotate up, and then we take out the 20, 30, 4, 50, and our target becomes 20, 40, 50. That is the secondary hypothesis. The key element to take away today, though, is that the European markets are closed. It's likely to be fairly choppy today. I would be very, very selective about what I commit to today. You need to kind of wait it out and play it pretty tight. If your targets are, let's say, 2, 3, 4 points, you'll want to look at those targets and see how the market's handling. I expect the rotations to be fairly tight. The U.S. markets are open, so I expect it to trade somewhat normal, but you're going to find that the first 2 hours of trading are a little more erratic than normal, since the European equities cannot be offset against the U.S. equities. So just keep that in mind as you're trading today. This is something you'll wanna pay attention to. So that's all I have for you. I want to remind everyone while I have you that I'm going to be on Futures IO, which used to be called Big Mike Trading Forum. I'm going to be on Futures IO after the close tomorrow. I'll post a link for that on my Twitter feed. This week looks like it'll be a pretty busy week, pretty active week. So just to keep your powder dry and be picky early, especially today with the holiday in other areas. Be picky today so that you have plenty of bullets left for the rest of the week to do something with it. Good luck, and I'll catch you tomorrow. Take care.